Welcome back. You're watching Markets and Macros, and at this point in time, it's almost a similar story. Mid caps outperforming, though you have to say that today the large caps are keeping pace or trying to keep pace. One mid cap where we have seen quite a bit of flying this month is M&M Financials. Let's pull out the stock. Up 3% today, but if you see the 1 month or 1 week chart, you'll see the kind of big surge that we have seen in that particular stock. 1 month, the stock is up close to 30%. Ramesh Iyer, MD of Mahindra and Mahindra Financial Services, now joins us from the sidelines of the Kotak conference. Mr. Iyer, hi, good morning. Your stock has rallied, and a lot of people believe that anecdotal evidence suggests that even auto companies are indicating the CV cycle, the commercial vehicle cycle, might now be showing some green shoots. Would you concur with that?
I personally think so, yes. Because, one is, of course, the sentiments are turning positive is one, but more importantly, I guess once again, if the infrastructure story would start off and, new states like Mahindra, etc. will start putting in infrastructure in place, I think overall one would see that after the elections, many of the states which had also gone possibly a little slow on their project sectors may possibly restart. So that's one very clear signal on therefore why CV should do well. Except that I would say maybe the first 6 months, it would absorb the available capacity before new capacities can be added. So I would think first 6 months would see better utilization of already existing vehicle park, and then definitely new buying would also commence over the period of time. But clearly one can see trends of positivity also in the commercial vehicle segment.
That's interesting. If you could give some more details in terms of those positive pickup that you are witnessing right now?
See, one, of course, all of us were asking, will anything happen? Suddenly, everyone is now asking, from when will things happen? So isn't it a big positive already? So I think that's one clear trend. Second is, all of us thought decision-making at the government would have been difficult if the constitution or the group would have been much larger. But now that the mandate is so clear, one definitely believes that right things would be taken up and therefore right decisions would come through and would come through much faster. And therefore that's one clear trend one can imagine will take it forward. As otherwise it's too early to say by transaction, oh, we have seen this or we have seen this. But we were all waiting for elections to be over. We were all waiting for the results of the election, and we were all waiting for the formation of the new government. And I think as of today, those are the only 3 good things that we have seen, and therefore everyone expects from here on things will only go the right way.
Okay, fair enough, Mr. Iyer. But in that sense, which are the segments that you could see an incremental pickup come through? Will it be the used, new commercial vehicle segment? And what areas and geographies would you possibly even be more confident on?
I would think it will not be restricted just to commercial vehicle. I think if the overall infrastructure story starts again, and I would definitely think that one would see positivity in almost all segments of automobiles. But I would think the first signs of real activity to say that it's started happening would possibly start from somewhere in September, October. That's the festival season. So I would think it would be kind of all automobiles. And why should it be any limited geography? I think it will be in across the country story. What one has to just wait and see is how is the monsoon likely to behave in this time. And if that also happens to be somewhere at least average plus, I think then we will definitely have a good time commencing September, October and going forward.
Okay, fair enough, Mr. Iyer, but I just wanted to focus on one piece of information in terms of anecdotal evidence that brokerages are talking about. How have collections been in Q1 as compared to Q4? Because reports from the used CV financiers indicate that borrowers have now begun paying full EMIs. Hence, are collections better?
It's too early to say, right? We had a great fourth quarter, that is January-March quarter. And for us, the geography that we work in, that is the rural market, normally because of extreme climatic conditions like summer followed by monsoon, historically for last any number of years, the first and the second quarter of the year is never going to be as good as the third and the fourth quarter. We never had a situation even in the fourth quarter of last year where we could say that no, there are a lot of pressures on collection. Of course, the collections were under pressure, but more because of sentiments. People were not really clear on what next, and therefore in the rural market, in spite of cash available, they were holding on to themselves. So to that extent, we had the positivity even in the fourth quarter. But to say that already things have substantially improved, I think it will be a little early statement. But clearly, we are not seeing any deterioration for sure. And the behavior of the market, at least the rural market, is as normal as we would have seen any particular year, which is why I am willing to kind of stretch myself to say one should wait for maybe a September, October, when we can really put down more clearly to say what are the direction which is telling us that things have become positive.
Mr. Iyer, the company had slowed down disbursals, in the last couple of quarters. Has that picked up? And are you now more confident of growth since the sentiment is turning positive?
Let me first clarify, as an enabler, we don't generate sales, and therefore we can only do as much as a vehicle or tractor sales are. And therefore the volumes for us would have also come down because the overall volumes have come down. But the disbursement net effect being lower is an outcome of discounts on vehicle. So let's say last year we did 100 vehicle, and this year if we do 100 vehicle, and if the vehicles are available on 10% discount, then our disbursements are going to be 10% lower. So in this year, if the discounts, vanish, and in fact some price increase on vehicle happens, even without increasing the volume, the disbursement growth will happen. So the lowering of disbursement is not a decision of our strategy to actually go slow on business. It's also an outcome of the vehicle prices being lower than before. So to that extent, definitely one would see correction, because our expectation is discounts would vanish and maybe there is a price increase during this period. And that would, even for the same volume, I think it will push up the overall disbursement. And we do expect we have added 250 branches last year, and we do believe we would add another 200 branches this year. And purely on the penetration strength, our market share should go up. And therefore, our confidence is that volumes will pick up and price increases and discount vanishing will add to disbursement growth.
All right, so let's talk about a bit of a macro problem that we could face going forward. How much of a risk would a potential El Nino situation pose?
I mean, to be very honest, these are all words that we are hearing fresh. Last 15 years, 20 years, we've been doing business in the rural market. Monsoons have its own effect. Never we have had situation where we can say across the country monsoons have been normal, etc. My belief is if monsoon is on time and it's widespread, I think that's sufficiently good, in my opinion, for a good farm output. Yes, if you have a little extra rain, you store them, use them for future, all that is fine. But I think most important is at least on time and little widespread will at least bring about an average output. And to that extent, we are not as worried. But some geographies will surely have impact if the monsoons were not to be as good.
Okay, fair enough. Mr. Iyer, then asset quality. It recovered significantly for M&M Financial in Q4. Has it bottomed out according to you?
We've always said this in a business model as ours. I think the worst could be a 5% NPL and the good could be a 3%, because eventually they are all cash flow driven models and it has cyclic impacts. What we always keep a watch on is our credit losses, and even at the increased NPL levels, our credit losses don't go up. And so to that extent, I think the asset quality has maintained itself. We don't see pressure. And the range bound on the gross NPLs, as we have always said, will be anywhere between 3 to 5%. We don't see them deteriorate.
Okay, and how have recoveries been?
It would never be. See, again, rural market Q3 and Q4 are the best quarters for festival season reasons, for harvest reasons, for wedding season reasons. So the vehicle utilization is much better, therefore the cash flows are much better. So it's not right to compare a Q1 to a Q4. But will Q1 of this year be as good as Q1 of last year? I think the reasons to believe that things are not deteriorating is very clear.
All right, sir. Thanks a lot for your time. That's M&M Financial saying that clearly there are some green shoots as far as the CV cycle is concerned. El Nino is not too much of a problem. Let's take a short break. Up next, Chirag Mehta of Quant